Good afternoon again. It's now about 2:25 p.m. New York time, and I just posted my pre-FOMC video to YouTube, and I apologize about the late post. I recorded it late because I got busy, and then I'm not at home, so I had an issue getting it uploaded. But it is up there now. Obviously, it's not going to help anybody pre-decision, but it's good information. It's good for review anyways. Like I said, nobody should be taking trading decisions on anything that I say anyways. It's just really for information and instruction and thought. So, but I wanted to admit this one will be a little shorter here, but I just want to make a quick follow-up one because the news is out. So as expected, they did not raise rates, which is not unexpected. So they did, they right now there's a little bit of a choppy move to the market. The Fed basically, although they acknowledged improvements in the labor market and some of the shorter term indicators, they basically said again they're maintaining their existing policy of reinvesting principal payments in order to maintain accommodative financial conditions. So that is a dovish statement. Market-based measures of inflation and compensation remain low, and most survey-based measures of long-term inflation expectations are a little changed on balance. So that's also a little dovish too. And so, as I was pointing out in the first video, I was expecting, based on the longer-term fundamental, that the Fed is going to look to raise rates slowly. And despite the positive sentiment that we had the last couple of days, that really nothing changed. If we go to the chart here, so here's the US dollar index. As I was saying before the news came out, I'm still recording here, yes. Before the news came out, I was looking at this being a possible wave 4, that this was an ABC correction, and that the dollar probably would go down again. And you can see it did make an initial spike down. It is pulling back a little bit, so we'll see where it goes from here. I'm still targeting for it to come back and at least re-challenge this low down here. Okay, so that would be about 56 pips down to complete this pattern. And so I am still expecting we'll see that complete. We'll go from there. And so that one played out. The euro dollar, of course, just the opposite. And you can see the euro dollar initially spiked up. It then came back down. And now this is a 15-minute candle here. So let's go to the hourly chart. Again, spiked up. It's now pulling back a little bit. But again, I'm still looking at this being, pushing up for another wave up, potentially to get back to this high up here. I'll go back to the hourly chart here and just crunch this down a little bit, and look for this to get back up to about here. And then at that point we may have a reversal, complete the trend. So maybe over the course of the rest of today and into tonight, and we'll see this push up. And then, during the London session tomorrow, I may have a different perspective to sleep on it overnight. And then, maybe they'll look at it more bullishly and then turn the dollar back up again, turn the euro down. Okay. So, but again, and then if you look at the U.S. Swiss, it's very much like okay, we look at the U.S. Swiss. Again, same thing. We had an initial push down. We did pull back a little bit. It is pushing back down again. So again, zooming out a little bit here, I am expecting again to see this come back down, re-challenge these lows inside of this larger downside wedge here. And then who knows, after that, it'll turn and move back up. But in the meantime, I think we still have to complete this downtrend. And I'm not sure that's over yet, because again, to me this looks like an ABC pattern, and I think we need to complete that first. But we'll see, because while it had an initial spike down, it's kind of run out of a little bit of steam here. but it is still going down, and it certainly has not reversed that. So I think the pressure will be on the dollar for at least the remainder of today and into the Asian session, maybe even into early London. But I would expect that this trend would end, and then we'll turn back up on more bullish sentiment. So I guess the other underlying question is, you say, I was saying in the first video, and you should really go back and watch that if you haven't, because it sets up a lot of this, that the pattern here really is what was dominating my mind as I looked at it. And so, the fact that I was saying that fundamentals and sentiment's important, really, some people would probably say to me, well, in the end, your pattern recognition was correct, and it really didn't matter what the fundamentals say. But that's not really entirely true. I mean, maybe it is to a little degree on this one. But again, the fundamentals are very important. The sentiment is very important, because that is really what drives the market. It's not patterns, okay? Patterns are a reflection of what's going on in the market, but it's not, patterns don't drive the market, okay? And unless you're a scalper, and if you're a scalper, I'm not really talking to you on this, because, scalpers basically just trade the noise in the market. They're down on low time frames, taking out a few pips here and there. That's scalping. That's not fundamental trading. That's not really pattern trading. It's basically just trading noise and just taking pips out of the noise. And there's nothing wrong with that. I'm just saying it's a completely different thing. But from the standpoint of this, the underlying fundamentals do matter, because with the dollar, the fundamentals longer term are saying, yes, the Fed does want to raise rates, but they're going to do so very slowly, very deliberately. There are more doves on the Federal Reserve Board than there are hawks, and so they're going to be very cautious in making those decisions. They're going to wait for a lot of confirming data, and even though they got some good data this week, the last couple of days, that's not enough for them to say, okay, let's go full board on rate hikes. They're just not going to do that. And
the Brexit vote in UK Parliament, the Article 50 draft law has passed the first vote.
They're still in
the bill passed 498 to 114.
So, you have to respect that, okay?
So now the law can advance to legislation to the next phase.
So it is still, important to note that. And just because the underlying fundamentals may say one thing in the shorter term, it may mean another. And so, the last couple of days, we saw the dollar move up here, okay? Well, this is all based on sentiment. This is based on this short-term positive views of the dollar. A lot of this in here yesterday was from, when Donald Trump was speaking yesterday and kind of talking the dollar down through his currency questions. But for the most part, the last couple of days, we've had positive sentiment. So it's pushed the dollar up, and there's nothing wrong with that. I mean, I traded this wing. I didn't trade this piece because of FOMC. I just didn't want to get involved. But I did trade this, and, it worked out fine. So there's nothing wrong with trading the sentiment based on what's going on. But just remembering that longer term, that, the dollar is slightly bullish, but it's not totally bullish. I mean, it's more bullish than it is bearish for sure. But, the Fed's going to move cautiously. And again, they noted that today, and struck a kind of a neutral to maybe some would say even a slightly dovish tone. Certainly cautionary, okay? Acknowledging the improvements, but knowing that there's still more before they decide about more rate hikes. And even if they come, they're going to be spaced out and slow, okay? So it is important to know both, but I certainly will use the patterns to kind of confirm or deny what I think is going to happen, but I would never just totally throw away the underlying fundamentals and sentiment, because you do that at your own peril. You're basically only trading with one eye open if you do that, or trading, as someone else said, just looking in the rearview mirror. So, all right. So I hope that helps, guys, and we'll monitor this and see ultimately where this price action goes. And again, I do expect this will continue down over the next many hours, but that eventually we will see that positive sentiment come back in, and the dollar will turn around and go back up. All right, and so you need to be flexible and keep an eye on the sentiment going forward, especially tomorrow. And then tomorrow we've got non-farm payroll. Now, as I mentioned earlier, the ADP payroll numbers came out today much better than expected. Again, see the first video for that. If the non-farm payroll, which is the government one, comes out tomorrow equally as positive, that could be the catalyst to send the dollar back high again. So between now and tomorrow morning, that comes out around, I believe, 8:30 Eastern New York time tomorrow. So between now and then, I think we'll probably see this pressure continue. But then tomorrow, here's the calendar. So again, we had this come out this morning, 246,000 against an expected 165, very positive. So tomorrow, not tomorrow, it's Friday. We have non-farm payroll, okay? They are expecting positive numbers here, although the average hourly earnings down. We'll see. A lot of times the ADP one can be a leading indicator. A lot of times they are similar, but not always. So let's keep an eye on this. But tomorrow we have unemployment claims. This doesn't usually do much. I'm not expecting we'll see this really do very much, especially ahead of the NFP on Friday. But so again, in the short term now, I think we'll see negative sentiment on the dollar after the last couple of days of positive sentiment. But then eventually we will see that negative sentiment turn back around again, because again, the underlying longer term fundamental on the dollar is good, cautionary, but at least slightly bullish. So hope that helps, guys, and have a great rest of your afternoon.